Let me show you how to increase your win rates and stay profitable in your trade. Now, listen, trading is all about one strike. Trading is about repeatable strike. Now, if you cannot repeat your win, forget about it. So trading is not about one hit. Trading is not gambling. Hit it once. No. Trading is about repeating and repeating actions. Now, so why and how will I stay profitable? Now, we have recommended this scanner for you. It has solved most or the major, part of your problem. Now, if you look at this scanner, what do you see here? It helps you to map and mark key levels. Very important. It helps you to mark and map key levels. You can see these are major key levels it has marked. Number two, it helps you to identify structure. It helps you to know the trend. Now, it gives you entry point. What text do you need? It helps you to, first of all, mark your key levels. Perhaps you call it support and resistance, demand and supply zones. It helps you to identify trend. It helps you to identify structure. So trend and structure are not the same. It is in trend you have structure. So you have downtrend, uptrend, and sideways. So scanner help you to do this. So let's quickly go. What will I bear in mind when I'm coming to trade a day? These 7 things. Write it down. We have packaged a very powerful, detailed training about these things. Now we call it the 7 wonders. So something was missing here. This was not there. So if you can search for it, you go to seller.com, probably if it's already publicized, you can find it. If it's not published, you can chat with me on this phone number +23490 470 44998. And I will avail you how to pay for it for this course, and it's going to help you. This cannot teach you how to actually trade profitably. So let's go. Number one, come to the market, you have to have in mind, how much am I engaging? So you are trading with $500 or $200, for instance. You now say you want to be engaging $10 or $20 per trade anytime you get a trade. Now, to get this trade, you just get in randomly. No. Now, first thing you want to check in the market is what we call the bias. And I told everybody, I said yesterday when we were in the market, so let me take off all of this. I told them that this market is a continuous downtrend. So we have to check the bias first. Okay, if you check the bias, that means you are looking for a buy. But I want to show you the overall architecture of this trade, of this market, for you to understand the job your scanner has done for you. Can I go ahead? Okay, so let me take off your scanner. So, ladies and gentlemen, this is what we're going to do. Now, this market have a structure. So I need to mark it on a daily. This is a daily time frame. I need to avail and check some important thing of this market. Now, so let's start from here. I got an established low here, and I'm going to take my probably horizontal ray and do it here. I got an established low, and I got an established high. All right. So if it's this an established high, an established low, why did Felix say so? Okay. Now, this place had some internal structure. So this is an internal structure. So, but the major structure, so let me get it here, is this one. Right? So let's just follow me, please. You can see the job your scanner does for you. So, but you need to have an idea about this. So this is a high, this is a low, and then this is a breakout structure. Now, this is like a minor structure. We have another breakout structure here. All right. So here is an established low. Okay, so as the market was traveling up, we expect the market to actually correct back to come and hit, all of this region are the structure. So for the market to come back after this break and push probably to mitigate any point over there. right? To mitigate any point there. So you can find all of this. So this would be like an inducement, and then the market should rally back perhaps to mitigate this place. So let me just show you. Mitigate this place. So we have series of points now. Now, the whole place is an area, all right? So why all of these are point? So this is an established low, okay? An established low that brought about this break. So this is the biggest, the major origin that produces this. Now, this market creates an inducement here, okay? And or to come back to actually mitigate this point or this point or whichever way, but never did. So if that's the case, so we're going to have something here. So you're going to have something here, this inducement. So it's an important area. Now, why do I like marking area? I like marking area so that when the market is coming, I know where to wage war for it, waiting for it, for us to fight. So can you see what I've done now? So here is a low, and that's a kind of, now here is a confluence. So here is a high, here is a low. So altogether, this is an inducement, this form a key level. All right, so if you form a key level, then we have this break and up to this point. This is not the origin of this. This is an inducement, and this is the origin here. Now, if that's the case, so the market took up and came here and created a low. So this is a low. So I'm going to make my, so this low become an internal liquidity for the entire journey here. So, gold is very powerful. Gold is a very powerful stuff. Now, why I'm doing all of this is that this your scanner help you to enjoy trade with ease. Now, look at it. I've marked this. So that means this is a liquidity. All right. So this an inducement is equally liquidity. So you expect the market, but it's another key level. So now, so let's quickly go. Now the market return up and create this low. And then we return back and have internal structure. These are internal structure on daily time frame. So at the end of the day, we got to this point. So let's mark this guy here. It's a pivot point. Okay. So here become a high. Now internal structure low. Then this is a swing high. Now, in this market, this is swing failure. It failed to actually break this and returning back. So that means there's a liquidity behind here that is going to sweep before taking off again. So there are too many things here. This market is going to be complicated. It will complicate issues for people. Now, if you look at it, this is the market. Now it has come here, sweep. So for me, I will have taken a counter buy. I sold, but I do not have time to take a buy. So I will have taken a counter by going to lower time frame. So if that's the case, what do I do now? The market has been selling and selling and selling. So you have this market get to this point, right? Swing failure. So that means we have a low here on a daily time frame. So here we have this, then the market return back. So what do you have here? An imbalance. And that's what's called what? Fair value gap. So the market reacted at that point, and that's where you have this massive sell, right? Good. Now, so there we are. The market since then had been selling, right? A doji, of course, continuation, sell, sell, sell in that order. So let's go to structure itself. So because when you start making use of our scanner, you first look at the daily. So what exactly am I supposed to look at? I'm taking a broader perspective, but if not, it's for me to have sold this. I sold this anyway. So to see a pullback first and then sell. But it confuses people because we had a jump. Now let's go to 4 hours. On the 4 hours, you're going to see a pure structure, though, right? So now let's go. What do you have here? I've told you that this is a liquidity, right? The market creates a low on the high and the low here. So we do not have a break. This is a sweep, if I'm not mistaken, except otherwise. So I may not need to go to detail of this internal structure. I will create this over again, and then before jumping back to this point. So here we have this. Here we have this is structure break. So this is a low. So let's just take this immediate. Now, these are meticulous job you're supposed to be doing. But what scanner is going to do for you will be surprised. So that means we have this as a structure break. Even though we have a swing failure as a swing failure here, it's a structure break on 4 hours. Now, if it's a structure break, so we have this, a structure break, and you still have a fair value gap up to this point, then we'll have it rally, right? So this is liquidity, and then return back up to take out the liquidity. So that means we break the structure here, a little rally, but we didn't fill this gap anyway. So this is another fair value gap. Did we actually swept it? I think we got a short touch of that fair value gap. Can you see now? We're going gradually. Now, let me now narrow down this for our time frame. And then we have this. This is another break. So we now have breakaway gap. So it didn't return back. So the market creates another. So we have a fair value gap, too many places. Here to this point, it's another fair value gap. Glory be to God. We rally to that, right? So here we have a fair value gap. And that's what the market returned back to mitigate. And that was a very powerful one, right? You can see that? Good. Then we have this now as just like a structure. Good. So we've broken that. Okay. So we have so many fair value gap. Yeah, this was taken. So let's say we have a major one here. Right? So you can see all of this scale. So there's a fair value gap here. Now, don't mind those jobs I'm just doing. The scanner is going to help you out. All right. So you can see that I've just delineated some level. Now, so we'll go to 1 hour time frame. Some go to 2 hours. Well, still part of it. Now, if you look at it, okay. All right. You can see when the market got execution, usually maybe 30 minutes, 15 minutes, 5 minutes, and all of that. So look at it. Here you have another fair value gap here. Of course, that was mitigated on 1 hour time frame. Can you see that? So this was not mitigated yet. So we have that. The market continues to go down. All right, so let's go to 30 minutes. Let's go to 30 minutes. Here you have 30 minutes. So what do we have on 30 minutes? So we have just all of those minor break. Yeah, so here. So we should have continuation. And so on 30 minutes, we have a fair value gap here. Will it be respected? Let's watch. Then we have another one here. So we can just take it together here. Okay, so we go to 15 minutes, which is supposed to be probably your entry point most of the time. So you just want to have a confirmation of your entry because T say market is going to be bearish. So on 15 minutes, we actually have an entry point. Probably you wouldn't understand if you're not trading with us. And then there's a rejection already at this imbalance. So let's see what's going to happen. If we're going to have a proper rejection, all of that. So let's go to 5 minutes. And I think, though that was not giving a very nice entry trigger, but that's already a rejection. So probably you want to wait to see what the market react to an extent. So sometimes this is good. I go to 3 minutes because a 3 minute can give me a very powerful signal. Yeah, so this wouldn't be a signal for me because this was one, but this was countering the signal. But look at what's happening. We're having more of a bearish candle continue now. So now let's go back. So to 1 minute. Okay. Now, so on 1 minute, perhaps when we came here, what has happened? On 1 minute, what the market did was this. We have a low here. Okay. So we have a low and then we have a high here. We will see a break, but that's not a break. So, but nevertheless, we have something like that. Then the market returned back to this point. So we have a buy. So probably if you go to 3 minutes, you may have that structure we're looking for. So, but the most important aspect is this: the market have reacted inside this box, and then you're buying. So after buying, we're checking this. You can see to see if the market was going to be reacting. So on 1 minute, this is actually a reaction, but this didn't close below this candle. This doesn't make too much sense for me. And then we have this engulfing. And then if you enter here, that was only valid confirmation for me. This could be just like a liquidity and all of that. Now, so if you go to 3 minutes, I want to see, I think it was on 5 minutes, I saw that I will have taken an entry here. Okay, yeah, so this is the candle, and this one, so none of them was valid. So I think let's go to 50. Okay, 5 minutes. Okay, not 3 minutes. Okay, so 5 minutes. Yeah, even though this two doesn't really tally, we have the accumulation, manipulation, and distribution. So if you hesitate on this one because this does not close above this, a week above it, so probably this could be the entry. So, but for snapper entry traders who set a limit order, will have taken a trade, but that was not a valid one. So the market is selling now. That didn't get to a top of, so that means the market will continue to sell, right? So now this, let's take back our scanner. So let's go to daily time frame back. So how the scanner will have helped you to solve a lot of issues. So let's go. Come on. So let's take it. Good. This is nice, right? Can you see some of the job we did? Yeah. So look at it. The structure: a high, a low, a high. Now no low because there's a high here. So this is an internal high. Then the market. So this is the breakup structure. Now this is an inducement. This is not right. It's an inducement. This is not a structure. And so no high, no low. So this lows this stand. Then we continue, take up to this point. Now look at it. We have a sell here. In this sell, we go back and then go to 1 hour time frame to find the sell. And that's a very powerful one. So you can see the market, a high. This is a lower high. So this is swing failure. That's failed rally. And then so we have this market now continuing to come down. So we have this, of course, you have in internal and all of that. So we have this, like where I told you that the market came back to. So let's go to 1 hour. So now coming back to this point. So this now created a low, like I said, and this like a liquidity being taken out right now. Now, so if we sustain being above here, right, then you can say, okay, invariably you want to go up. If not, the market is still going to go down. And then going down, take out all of this time. And then, so look at this low. Now, the problem you don't want to have is to take out this. If you take out this, that's going to be very disastrous. Okay? Right? So then, but this is already a shift. A high, a low, a lower high, then sweep of liquidity, or market break below this low, and then that become a market structure shift on daily time frame. And then we want to have a pushback up. So we'll take it up from here, take a Fibonacci retracement, then take to this low, or wherever the low stopped, maybe here. Remember, this is the best, the next low. Now, so if you take that, so that means you're waiting for the market to return back up into this region. And what can you find? Very simple. You can find a fair value gap over here. So well, all this one mitigated. Okay, so this is the daily fair value gap, and it's inside above equilibrium into the golden zone. So that means you want to look at the market in that dimension. So let's go to 4 hours quickly. So this is 4 hours. Let's go, let's go, let's go. Come on. Good. So here is 4 hours. So let's take up all of those jargon I put in here. Okay. Remember the jargon that I put there? Okay. So I'll take off this one too, so that you can see your chart very clean. All right. So here is the market. So the market, when it came here, I told you about the key level on daily time frame. Then the market reacted. We sold the market from up here, and then so today, look at the market. We don't know which fair value gap was this, but I think the market reacted to that point. Now, on that 15-minute time frame, this was a rejection of 1 hour time frame. Okay, that was a breaker block. Come from here. So the market, so I think we have a breaker block and rejection into the breaker block, and that causes sell. So that's the fair value gap, right? So here we have this. Okay, no, that was the previous one. Oh yeah, that was yesterday. Okay, market open. Now have a rejection, right? So be careful, come back here. So let's take this. So let's go back to the 1 hour. All right. So you can see there's a rejection inside this fair value gap. That was a very nice sell for me and you. All right. Let's take this down first. Huh? You see that rejection? That is the rejection. A rally back again. So massive sell. That was a very nice one for us. So go to 30 minutes. I told you about this. I told you about this in 1 minute just now, or even 5 minutes and 3 minutes. That was another fair value gap. Market rejected. So the market is still going to sell. That's what it means. Okay. Yeah. So go to 15 minutes. Now, so you can see the market is selling, right? That's a rejection. Power of 3 is already forming. Now, if this market close bearish, that's a massive sell. But you go to 5 minutes, you will have found a trade. Let's go. Okay, so 5 minute time frame. So you saw this 5 minute time frame that entry gave to us. And so that means you're taking a trade there. That's a counter trade, but you're going to be very careful. So that means you will have target to this point at the close of this candle. That was only a perfect one. That was only a perfect one, But nevertheless, so you target this fair value gap. All right? You target that fair value gap, and then you are in a trade. So you will have done 960 pips. That's crazy, right? That's crazy. So go to third. The market, the momentum was high. So I told you that this was selling. In 15 minutes, was selling already. So go to 3 minutes. Oh, good. So on 3 minutes, this was a sell, but that was only a powerful one. But of course, it had an area of focus, and that's why we have sold. Now, after this candle, this is the candle that will make you to sell. on 3 minutes. So that means this sell still continue in that order here. Your stop loss above the fair value gap. That's about 350 pips. The volatility is high, so probably will target this point again. So that's about 1,120 pips. Yeah, so that's it. So we go to 1 minute time frame. You know the momentum is high. Okay. So 1 minute time frame. So let's look at it. A 1 minute time frame. This had formed a low. So this is a high here, or internal high, and a low. So take over here, and then we move. So get into a support level, and then move it up, creating a liquidity, and then this is a low, right? So, and then we already have a rejection block there. That's what form your entry. So perhaps on that 1 minute, you will have found a trade here. Of course, your stop loss above here. So that means your entry will have been more faster because the market is more very, very volatile right now. So here you find this with the help of your scanner, give you more confidence. So that means, and I know definitely because it's inside the fair value gap here, you definitely will have taken a trade here, but stop loss above here. So that will not make you to get stopped out. So when this is gonna happen, so you find a trade, your stop loss above here, right? And then so you'll take profit down here. So that means the market still continue. You get that? So that's it. So this scanner is a very powerful scanner that we have encouraged people to settle down with and trade and make money. This is a powerful thing about our trading scanner. So you don't disturb yourself unnecessarily. So, but the market can still twist you. So understand that. Can still get twisted by the market because like what USD is still doing us right now, still pushing up and down. And after we have sold down, see what it's still doing now, buyback and all of that. So that's one of the things you have to understand. All right. So if you go to daily time frame, so the market's about confused, small, somehow very confusing. So you have this market, and so it's just doing what it's doing right now. So go to one, so take another market. So I saw a market that was moving. Wow, 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 wow. This has really pushed. This has really pushed. Yeah, I got this last week. This has really, really pushed. Daily time frame. So look at this market now. So as I come for the day, so let me take, wow, this is crazy. So this market is turning point, it's a turning point. This is an internal structure. So here we have a previous time. Was bullish anyway. So then let's go to 4-hour time frame. So going to 4-hour time frame. If you find some 4-hour time frame, excuse me. So on 4-hour time frame, this market's already saying sell. So you didn't find a buy, right? And it's telling you to sell. To what extent are we going to sell? But if you observe something on daily time frame, what did you observe? A very quick one. I'm not asking you to plot, right? So what to find is it? It's an internal structure. So you perhaps want to see if the market is going to correct down. So into this point, and then we have a fair value gap here. If I'm not mistaken, let's go. Yeah, inside here. So let me take this. So I think this is this. So we'll go to 4 hours. So on 4 hours, we still have another structure here. And I think we'll have a fair value gap here. And then if you take from this to the point, let's see to what extent will it go. So with these, you want to go to 15 minutes. So on this 15 minutes, you wait for this candle to close bearish. If it closes bearish, you want to sell down to this point. When you get to this point, you want to see another buy opportunity, and that's exactly how you roll. Just like I told you about gold was to sell. So on 5 minutes, that was not powerful. So you just have to wait for a confirmation. Having known that the market is bullish, it's either you don't sell at all and you wait for it to return back to this point, and then you want to be buying. Okay, so let's do that 3 minutes. So the same thing we're having. So I told you about the selling of this one. Have you seen that? Powerful sell, right? Crazy. That's massive, guys. That's massive. That's massive, you know. So once it's able to take out this now, that's crazy. So go to 1 minute, find it faster. So this one is not a valid one. So if you give a signal, you need to have a confirmation. That's what it is. So the trade continue. Then, so on 1 minute, you perhaps may target here first. Okay. So, ladies and gentlemen, this is the simplest way of a scanner helping you to take a trade, especially on gold. You're going to be enjoying yourself, taking trade as sweet as possible, riding the market with ease. Very, very simple. Yeah, so very simple. So the market can be very diluted sometimes. There's no doubt about that. So you have to understand that fact. So you can see this market we sold down this morning. Powerful, but what happened? So eventually still returned back and all of those things. And after he had done the very nice job. So you got to be very careful. And so what happened is that when he give you a buy or sell, all your target is 1:2 risk reward first. Then you begin to trade the remaining one. So with that, you will have been able to book some good profit down and not entangling yourself into the market. But if you look at this one now, 1:2 risk reward will have been done instead of like what the market, I think, is just pulling back. So 1:2 risk reward will have been somewhere here. So that will have been done. Then if you have any position, you trail it and then allow it to run. That's why we said find a position, stay with that instrument for that time being to make your money rather than jumping, except for swing trade. So if you can find a swing trade, you want to allow the trade to run, swing. Okay, so you can see the market I was just telling you now for a sell. So the sell was confirmed now. So look at it. Now I was telling you of 15 minutes and then go to 5 minutes. Was that not? Yeah, that should be. That should be. It is. It is, right? Yeah, it is. Okay. It is. Yeah, it is. Not us. So I was telling you guys that so in 15 minutes we got that. Okay, we said the markets will come back here. So I think it's selling. Yeah. So yeah, so 15 minutes. That was not a palatable one, you know. Go to 3 minutes or 1 minute. Probably if you can have a shift in structure. But you must know that it's a counter trend you are taking. So once you take it, give you some profit, you want to take your profit from the table. Very, very important. Okay. To tell you how bullish the market is. Okay. So whatever thing you are taking is counter trend. But most time I always encourage beginner not to involve in counter trend. Trade with the trend until that you can be helped when there are issues. So you can see gold now just push back massively, assuming somebody is not on, yeah. So somebody who is not using the risk reward ratio. So this is 550 pips, 580 pips. What then are you looking for? Gold is very powerful. It has a lot of volumes. All right. So that is it, ladies and gentlemen. And I think this will work for you as much as possible. So you can watch much of my video to understand how we trade and how we maximize opportunity in trading. You want to subscribe for the scanner? It's very cheap. $200 per year. You have access to so many things. You have a nice time and bye-bye.